Welcome to the Elevate Your Equity podcast, where we, as married busy professionals, leverage real estate investing to unlock the 3+1 degrees of freedom: health, location, time, and financial.
And today, we've got a powerhouse on the show. We've got Mr. Kyle Mitchell. Kyle is a real estate entrepreneur and the best-selling author of Best in Class. Kyle focuses on multifamily syndication and currently has $107 million assets under management. He's a managing partner of Vertical Street Ventures and the Vertical Street Ventures Multifamily Academy, where their mission is to combine high potential assets with best-in-class asset management to deliver forecasted returns while making positive impact in the community. And with a background in operations, management, and logistics, Kyle has overseen multi-million-dollar businesses and has a passion in doing the same in the multifamily syndication space. Welcome to the show.
But thank you so much for that. That was awesome.
Yeah, dude, you did a great job putting that together, writing it, because it's very accurate. As a matter of fact, you were one of the very first people that I had met that had gotten me interested or inspired to get into the syndication game. Because when I first talked with you, I think I was looking to become an LP somewhere, and I was looking to try to find someone to mentor under. And you had a lot of things to tell me, a lot of great wisdom. You probably don't remember it, but it was 3 or 4 years back. And so just want to thank you there for that early advice.
Oh, very cool. You're very welcome.
Yeah, absolutely. So let's jump right in. The first thing that I like to do on our podcast is to start to ask our guests how they got that spark, how they got really interested in real estate investing from the beginning. So why don't we start there?
I think it goes back to what a lot of people say is they read that purple book, which is Rich Dad, Poor Dad by Robert Kiyosaki. I read that book and I got excited, but what really did it for me was actually Cash Flow Quadrant, which I read after that. And it just made a ton of sense. And I said, holy cow, I'm on the left side of the quadrant. In everything that I do, I need to start at least making some small steps to the right side of that quadrant. And that's when I kind of started the ball rolling in real estate investing back in 2010. I started listening to a bunch of podcasts and I heard about this thing called passive income and, all this other stuff that comes with investing in real estate. And so I fell in love with it pretty immediately. I started buying single family homes. Did not love that asset class more because of the lack of opportunity to scale, in my opinion. Now, it doesn't mean you can't scale, but I think there's more opportunity in the multifamily space to scale. So I stopped doing that in probably 2013 and took a break from real estate investing until I found multifamily a few years later and then dove headfirst into that.
I guess anything behind the purple book that you read, or maybe purple book number 2, because usually like there's a fed up moment or there's something that happens in your full-time job or, your life situation where you realize this isn't working. Can we explore that just a little bit?
Yeah, absolutely. I break it up into 2 pieces. When I first got started in multifamily investing, it was not that I was fed up with my job. I actually just got a promotion about a year or two earlier. I loved what I was doing. I didn't think I was ever going to leave the golf business, which is what I was in, but I was making more and more money and I wasn't sure what to do with it. And that's when I started reading books on investing and mixing in personal development books, which I actually got very hooked on at that point as well. And I had never done that before. And that's kind of what got me into the world of personal development and continued education in things that I'm interested in, right? No, so I'm not studying science or mathematics or anything like that. It's things that interest me, and really personal development and real estate started to interest me. So it was really just figuring out how to put my money to work. And then about 5 or 6 years later, I really started getting burnt out on my job. I was just overworked. I didn't love the drive. I was driving an hour and a half each way to work, and it just burnt me out. And so that's when I started looking for something else, just scouring the internet for anything to do. I've always kind of had that entrepreneurial mindset and need, although I was a W-2 employee for 21 years. And I just fell across an online course that said you can buy apartments. And I said, no, this isn't right. Let me look into this more. And 3 weeks later, I was hooked. So that's kind of how that happened.
Very cool. It's so funny. I hear many different variations of that story, including in my own experience as well, where it always, for some reason, is anchored by the personal development. There's always that realization that I hate to say meant for something bigger, but because it's not necessarily true, but there's something out there that you haven't done yet that you want to explore. And then this personal development gives you the empowerment to actually start asking the questions like, why not? And so unless I'm mistaken, that must have been a big part of your journey as well.
Yeah, absolutely. 100%. Couldn't agree more.
Very cool. So one thing that I want to ask before we start jumping into your special talent, which is attention to detail and asset management and all that, is the fact that you are successfully running a business or have run a business with your wife, with your spouse. That's something that I know a lot of people wish that they had and want to try to emulate that. So can you talk a little bit about how that happened? Was that also organic, or how did that come about?
I don't know if it was as much organic as me pushing it onto her, but my wife's the reason why I'm able to be where I am today, and our family is where we are today, because she showed a lot of support in what I was trying to do and was there every step of the way when we were getting started. So, when we first got started, I found that course that I mentioned, and she also took it. And she took it upon herself to educate herself and learn and go to the meetups with me. And we started a meetup, we started a podcast. And so we were on the same page as far as why we were doing it, what we wanted to get out of this, and what the long-term goals and benefits would be by doing it. And, I ended up leaving my job while she kept her full-time job in order to support us while I pursued this career, this new industry, this new kind of venture. And so it was really important to have her support. To be honest with you, if she would have just said, I'm not into it, I'm not going to start the meetup, I'm not interested in this, I do not know if I'd be here today. In fact, I'd almost guarantee you I wouldn't have. It would have been something where I would have said, okay, well, then I'll find something else to do. There was a lot of things that were involved in my first 3 years of this industry and this business that required me to get out of my comfort zone. And I needed her support in order to get out of my comfort zone. And some people don't need that. I was in a place where I needed it at that time, and she was there for me along that lines. Just speaking at a meetup, for example, I'm a very introverted person. I was terrified to speak in front of other people. I've since gotten over that, but even still, it's not my favorite thing to do, right? Is public speaking. And so she is actually very good at public speaking. And so she helped me along in that area and really gave me the confidence that I now have.
Yeah, that's awesome, man. I see so many similarities between what happened with me and my wife as well. What happened, same with yours. I'm a very detail-oriented person. My wife is very much the visionary, and without her support and even pushing, right, to say, "Hey, it's time for you to leave your job, or it's time for you to step into this and find something that you're really meant to do," there's no way that I'd get as far as I would be here today without her. So I love that we have that in common there as well. Do you also follow the same vein that you are an integrator, or you like to work with details and pull everything together and make it happen, and then your wife kind of like is there to help advise on what it is that you're actually achieving? Because every once in a while, for me, I know, in the real estate business, it's so broad, there's a lot of different directions you can go, and you kind of need someone that's good at seeing through like all of the details and all the minutia to figure out what it is that the end goal is, what you're trying to tailor your profit towards or tailor your vision towards, right? Do you find that that's also useful in your relationship?
Absolutely. She definitely is an advisor to me. I bounce things off of her all the time, and she kind of puts me kind of in more perspective on certain things. The one thing I've learned over the last 3 or 4 years being in this business, though, is I am an integrator in some sense, but I think I'm more of a visionary. And I think my mindset was that because I was in the details in my previous job, I do have great attention to detail. I do love the management and operations side of things. I automatically thought that I was an integrator. And to be honest with you, the more I spend time with other people and talk about it, I am really more of a visionary. And so I'm more shifting into that role now, which I'm excited about. I get a lot of energy off of that, which tells me that I'm moving in the right direction. But it took me a couple of years to just even think that I was a visionary. So kind of interesting.
Well, let's talk about that just a little bit more, because I'm fascinated here. What was the catalyst to push you into that kind of transition? Is it just lots of property, or was it the educational products that you're putting out there, or a combination of that, or just a natural progression? Talk a little bit more about that evolution there.
Surrounding myself with the right people, for sure. So, I just joined Vertical Street Ventures and we're partners now, and being around the right people really helps elevate me and makes me a better person. And also we talk about different skill sets and complementary skill sets and the future of the company. And those things, as you naturally progress, so some of that's natural progression, you start to see those things come out. And I really get a lot of energy off of talking about bigger picture items, where we're headed, what the 5, 10, 15, 20-year goals are for the company, and some things that we can do to integrate new, innovative kind of solutions for our investors and for our business.
Excellent. How is your wife responding to all this?
Yeah, I think she loves it. So she is now going to be taking on a new role as well. So she kind of took a step back from the business when I left my full-time job, and she still had her full-time job, right? So she was focused on what one of my friends says is the cash flow, the day-to-day incoming cash flow, and I was focused on the equity. So she kind of took a step back, although she still did the podcast with us. But now she's going to be helping out on our nonprofit side. So we're starting a nonprofit here in the next few months that's going to be focused on a few different items. One being educating children on financial or getting a financial education, which I think is really important in some of our communities. And then hopefully it'll grow from there. So she's going to be helping out on that arm, which I think she's really excited about. But, we've both worn a bunch of different hats through this progression. And at first it was both diving into the business, and then one was supporting while one built the business. And now we're both in a role where we're evolving to be in the roles that we really want to be long term.
Yeah, congratulations. I know that takes a lot of work and clarity, and it's a very much an iterative process. And I think that you guys have found your groove there. So I wanted to congratulate you on finding what it is. Some people live their whole lives and they don't even know what they want to do, right? They're always told what to do because they have a nine to five job, or they're just not surrounded by the right people. So I think that that's really important to be grateful for what we have, as real estate entrepreneurs, to enjoy what we do.
No doubt about it. And there was a long time where I was the same way. I was not sure what I ever wanted to do. I searched for 2 or 3 years when I was tired of the golf business for what I am now in, which is multifamily real estate. But I would just encourage people who do feel stuck or not quite sure what their thing is. You're not going to just sit there and all of a sudden it's going to hit you in the head, right? But if you're surrounding yourself with people, you're getting out there, you're talking to other people, and really being around people who are doing better than you are, surrounding yourself with that kind of level, you're going to find out a lot faster than just sitting there and hoping that it, hits you upside the head, which, I was guilty of for a little while as well, because it's exhausting and you're kind of not sure where to go. But the first step for me would just be to surround yourself with the right people.
Yeah, I think that cannot be understated. That's a great takeaway for the listeners, that putting your network around you of people that will help elevate you into the next energy state, maybe that are like just a few steps ahead of you or even way ahead of you, right? I think that there's two, Kyle. There's like this natural draw that you have. If you start surrounding yourself around those people, you start saying, man, like I could do this too, and then there's like the subtle type of, I don't want to say peer pressure, but maybe inward expectations that starts to elevate a little bit. You start to gain more standards for yourself. And I think that that was really powerful for me as well, just like it was for you. And love how you guys did it together, going to the networking meetings. And I think that's pure gold for people. So let's go ahead and shift a little bit, because I want to talk about asset management, right? I want to talk about this because you literally wrote a book on it, which, I know we're going to talk about a little bit later on so that people out there, they can get their hands on it easier. So let's talk about this. How do you think about asset management? First of all, what do you consider to be asset management? And then we'll go from there.
Yeah, asset management to me is managing the execution of the business plan, right? And a lot of people may say, oh, well, that's for the property management company. Yes and no. They're definitely there to run the day-to-day operations, but they don't know what your business plan is, right? Only you know as the owner operator or whatever team that you're a part of. And so there needs to be someone on your team that's able to drive that and work in tandem as a partner with the property management company to execute on that business plan. They are not the final decision maker. And so you need to have someone on your team that's going to help with that, number one. If you have in-house property management, then those two may kind of cross their own paths and kind of integrate with one another, but we don't. So, we don't just hand the keys to our property management company and say, hey, raise the rents, renovate the units, and that's all we care about. So there needs to be someone on our team that's managing that piece of it. And that's what asset management is.
Love it. Absolutely. When you start to think about asset management, how do you think about that during acquisitions?
Starts from day one, for sure. When we're managing or when we're underwriting a deal and we're coming up with our business plan, how much we're going to spend per unit, what are the things that we're going to do to separate ourselves? I mean, the asset manager is going to be involved in all of that. So the first time they really get an eye on a property is when we're doing due diligence. So we're there, our asset manager is on site with us during due diligence. We're walking the units together. We're talking about different things and the overall business plan with our property management company so that everyone can be on the same page.
How do you guys take what you've learned from previous properties and build it into business plans for future investments when you're doing acquisitions? Do you guys have tools, lessons learned? How do you guys do all of this?
I think that has been the biggest reason why we've been able to grow so much over the last 12 years is the work that was put in the first 3 years, right? And the more properties that we acquire, the more we learn and the more we can utilize our own comp set, which is huge, right? So if you're a new investor coming into the Phoenix market, you may be underwriting something a certain way based on a T12 or other comps, but they're not really yours. So you don't understand what's really going in that business. For us, we have properties, 14 other properties out in this market. So we understand how quickly we were able to execute certain things, how much it costs per unit, what our business plan is for each property, and what rents we're getting for that level of renovation. So you become a lot more realistic in your underwriting, I would say. Some people would say it's aggressive, but all you're doing is you have more information now. And the more information that you have, the more accurate you can be on your underwriting. I think a lot of times when you're first getting started in this industry, you tend to be conservative on conservative on conservative. And it is because of a lack of knowledge. And so the more you grow, the more knowledge and information that you have, and you can utilize that information to make better decisions.
Such a great piece of advice there. I followed that pattern exactly. I found that I couldn't get a deal to work in my first probably 8 months of underwriting properties. And I did probably 10 a week at least, in 4 different markets across the US, and I couldn't do it. And I love what you said about getting knowledge, because then you can cut away those conservative blanket statement assumptions, right? Because sometimes if you're going to get the deal done, you have to be realistic about what it is that's going to get it done, right? In the market that you want to invest in. So I really love that advice. I wanted to talk a little bit more about the tools and techniques that you actually use to track operations in the building. I have more questions geared towards what it looks like on a month-to-month basis and your relationship looks like with your property manager. But do you have anything in-house that you're using to track things like a spreadsheet or some proprietary software? What are you using to help keep track of all of these moving pieces?
Yeah, so we use Yardy, and that's what our property management company uses, and they have a BI tool that we're hooked up into. And so that's where we get a lot of our KPIs and data that we look at to make our decisions. We do have our standardized reporting and task lists and things like that, and certain KPIs that we look at more than others right now. But that BI dashboard is our key tool that we use to be able to track all the data and information that comes through our properties.
Cool. And as far as the communication goes with working with your property manager, can you talk a little bit about the cadence and, what things are talked about in those meetings?
Yep. So we meet on a weekly basis via Zoom so that we can screen share. It's not just a phone call. We're going over a report and a task list line item by line item together. Now that's for a property that's just taken over and we're in the value add phase. If we're stabilized, we may back those down to every other week or even once a month. One of my partners has a property zone for 5 years now, and it's on cruise control, knock on wood. And so they talk once a month, right? And you can gear those up or gear them down as you see fit. But on those weekly calls, we try to be as organized and as efficient as possible. And so the property management company has a report that they fill out on a weekly basis, and we host that in Google Drive. And there's a tab for every week. So we can go back and forth between the tabs to see. And some of the things we track there is our overall vacancy. Our renewals is something that we track. How many units that are vacant are ready? Where are they in the process of being turned if they're not ready? What is our delinquency? How did it improve from the previous week? And the leads that we get in for leasing, how many leases did we have? How many applications? How much traffic did we have? So we're tracking conversions between all that. So that's kind of the first piece. We let the property management company kind of walk through that whole report and let us know if they have any issues. And then we move over to a task list that basically has every single project that's going on, and we update it by date, right? So last week you've got a line item of what was talked about, and then you started another one, and that way it's always right in front of you on what's being worked on and when, and the follow-up. And I think that's the most important part of asset management, is being able to hold someone accountable and follow up on items. I think if you don't have a format and you're not organized and you're not tracking it, well, then it's hard to follow up the following week, right? You tend to forget about things because there's so many different things to go off of. So you need to make sure things are measurable and traceable, which is what we try and do in every piece of our business.
How do you keep your property manager on board with this system? I mean, obviously, I know there's a coercive part of this where you're just like, you got to do this if you want business. But is there a conversation when you guys are drafting up the PMA, right? When you're under contract on a property where you're like, look, this is our process. And maybe you already have those relationships with certain property managers or third-party property managers in the area. But for those who are getting started and want to implement a system like this, how do you get a new property manager on board? Is that a difficult thing, or do you do something like this that's light? Can you talk to that for just a second?
Yeah, so it starts even before you get the PMA and have selected a property management company. When we first got into the market, now we just invest in Arizona, since we've got one property in Texas, but we use one property management company for Tucson and one for Phoenix. But when we first got started out here, we interviewed 10 plus property management companies, and they whittle themselves down pretty quickly to where we got to a top 3. And then we talked to those top 3 for months before we got our first property, and we would invite them out to tours, and we got to know them personally, because they are really they're your boots on the ground in the property. The fact that I live in Arizona is fantastic. I can drive to any of my properties, but I'm not there every single day at every property running the day-to-day operations. It's important to understand, what their goals are, what their future looks like, what their infrastructure, how it's built, all that stuff. And so while you're having those meetings, before you even have your deals, you're talking about some of your expectations, some of the things that you'd like to do. And the biggest thing for us, besides infrastructure, which is my number one thing for property management companies, is the fact that they're willing to work with us and customize certain things. I know that everything cannot be customized, but will you customize certain things? And those conversations were done before we even had selected our property management company, is likely why we went with these 2 property management companies. And so they understand what our goals are. They like the fact that we want to grow and get better, and we help them get better, right? So this is a partnership. It's not they work for us. It's definitely a partnership. We work together on the right solution. So sometimes when we're changing up reporting or the way we look at things, we want their input as well. Because what you don't want to do is have reporting that is so demanding that it takes the manager, who should be managing the property, hours upon hours to fill out a report. It's a waste of their time. So how does it become efficient? How do you work together on getting the right things on that report?
Yeah. And it's a really funny relationship between the property manager and the owner when it comes to this, because you want, as the owner, the property manager to do well. The property manager wants the stuff to get taken care of. So if you're the type of person who's not keeping track of things and not holding up your end of the bargain, they're not going to take you seriously, right? So I think it's important to emphasize that it goes 2 ways. And maybe, have you found that if you hold up your end of the bargain and you're pretty much there as a professional courtesy to be like, hey, you said you're going to do this last week, this didn't get done, what's the deal? Do the property managers almost appreciate you for that? Or do property managers appreciate your stance on asset management to keep them accountable?
I think some do, and some find it difficult, right? And it really depends on the person that you're working with. And we try not to micromanage, although it may sound like we are. We are there as a partner to help them get better and us get better. If they're doing everything that we've kind of set out, the goals and expectations, we're going to let you run with it. You guys are doing a great job. That's fine. But we're also a checks and balances for them to make sure they're being held accountable for the things that they need to get done. You've raised capital, or at least our business model is that we raise capital from private investors and then provide them with a return, right? And so we have an obligation to those investors to make sure these properties are managed at its highest level. And so if you're not holding them accountable, then who is? And so you're not doing your job as a sponsor, owner, operator. So there is, they've got to know that as well, that we have investors that we report to. And so I think there is a way to communicate certain things where our property management company does appreciate our help. But if you don't do it the right way, it can become one of those things where it does seem like you're micromanaging them, or maybe you don't respect them at a certain level. Again, we look at our property management company like they're our partners, and we want a long-term partnership with them, and we want them to improve just as much as we improve.
Yeah, very well said. I think that's 100% true. How do you take the data from Yardy? Because you said that you have a Google sheet that you're using for holding the property manager accountable to what they said they were going to do. And how does it integrate with Yardy's BI system? Is that where the data feeds in from, like the raw data from rents and stuff like that? And then as far as move outs and things that are a little bit less data driven, Is that where that comes in with the Google? So you're using both of those that integrate with each other, or how
Yeah,
does that
they're
work?
completely separate. So the BI dashboard, everything integrates. It's within Yardy, and we can take a look at screenshots and certain things. But the Google form is something that we have the manager fill out on a weekly basis, and that does two things. Number one, it gives us a snapshot of everything we want to see in one area, so that we're not moving from page to page on our BI dashboard. And we review the same things kind of on a weekly basis. And then I'll review the BI dashboard. If anything pops out at me, I'll bring it up on the call. But it also puts the manager in a position where she's educated about how the business is running, right? So I think if you have a manager and they're not inputting this data, they don't know how many leases they got last week. They don't know what the forward trend looks like or what your exposure is and how you're doing on a trend basis on delinquency and things like that. And so this allows us to educate them in an easy way. They just fill out this form and all of a sudden they're like, oh man, we didn't have much traffic last week, or, oh, we didn't do, we didn't convert enough, or man, we've got to send renewals out, things like that. There's just checks and balances.
I love that. Yeah. And that's something I'm looking to build out myself. So definitely this is great stuff. Can we talk a little bit about the high level business plan? I know that as an asset manager and doing acquisitions, and I think you've raised some capital yourself as well, and you've done kind of everything. You've worn all the hats. What I'm looking to do, or let's say if there's investors out there or people who are in the active multifamily space that want to be more involved in the asset management, how do you think about the business plan and then the month-to-month operations? Are you tying together things with KPIs? Like, are you trending out saying, okay, if we're going to raise, in order to hit our return goals, we need to raise rents by $200 this year on average? Does that mean that you are actually bringing that into a granular form in your Google Sheets somewhere? Or how are you bringing those goals into your metrics to track them?
For the asset manager?
Correct.
Yeah, so we've got a couple different ways, and the simplest way is that we have a budget every year, right? And so our asset manager, what we want them to focus on is, number one, staying on budget in the CapEx, on the CapEx items. And then number two, hitting your NOI targets. So that's the main way. But like I said, we start with our asset manager in the very beginning when they're at due diligence. So they help with that process a little bit. But we also have a tracker on our CapEx, and they're in charge of tracking all the CapEx items and making sure that we're staying within budget. And so those are the two main ways, is staying within budget and then driving the NOI. Revenue cures all evil is one of the sayings that they used to use in the golf business, and it really does. And so if they're going to hit their NOI numbers, it makes things a lot easier, right? So
yeah, definitely. And do you guys track that on a quarterly basis, or like, how are you comparing to make sure you're on track for the business plan or off track?
Yeah, I mean, we track our budgets on every property on a monthly basis. It does not mean that if we miss a month, there's a problem, right? I mean, there's always an explanation, but typically in anything, we look at trends. What's the trend been like? Are we on a downward trend? Was it just one bad month? Is there something going on with a certain property, or is it our entire portfolio? And thankfully, we have not gotten to the point where it is our entire portfolio, but there's definitely got to be checks and balances for your asset manager as well. And so I'll pop onto the calls and listen to he or she run the calls, make sure that they're being efficient, making sure they're visiting the properties as much as we'd like, and they're making the right decisions. So there are some checks and balances there as well.
Can you talk a little bit about how your systems evolved? Because when you first started, you're doing your very first property, right? I imagine that maybe the first thing you did was you had a Google Sheet or some sort of Excel spreadsheet where you're pulling data and then pushing it in. And then you had like some database or backend where you're pulling up all the things the property manager said they were going to do, but didn't get done. Or you have a list somewhere, right, in that sheet. Can you talk about how you've evolved from there? And, at what point you think it makes sense to start getting some professional tools in place?
It's like mom and pop to kind of business structure, right? And building a company. And we've certainly gone there. I was just using spreadsheets, Excel spreadsheets saved on my desktop. And then we would email them back and forth to one another. And now it's on a shared drive, which is just more efficient. But we consistently try and improve on different things based on where how the industry's progressing, what our other partners are doing, what other people in the industry are doing. As technology improves in this industry, it's making things a lot easier, but it is not easy to implement. making that step is the hardest step. And really, because we've been able to expand our team and bring people on, it has helped us in that area. And like I said earlier, you got to surround yourself with the right people, but you always have to continuously improve. And that's one thing that we focus on. But yes, I think every single month we're trying to improve our processes to make them more efficient, more streamlined, and even more automated as much as possible. And that helps you become more efficient and grow as a company as well.
Definitely. As we wrap up some of these asset management questions, I have one more thing to ask you here. Do you have any kind of like tips as far as low cost, high ROI decisions? Or maybe do you have any that you've made in the past that you're really proud of, that you've implemented either inside the interiors or on exteriors or just in the business plan itself?
Yeah, great question. I'm trying to think of the best example here.
What came to my mind right away was like those USB plugs. Like I heard that if you install those USB electrical plugs, like people will be paying $20 a unit per more just for that, right?
Yeah,
But
I don't know how much that I don't know if you can charge $20 a unit more, but to be honest, right now we've dialed back our interior renovations a bit because we're looking at lease trade outs. Okay. And so what a lease trade out is, you have someone that's renting today, they moved out. What's the new rent of the person who moved in? Is it $300 or $400? Or renewals? What's the renewal trade out, right? You renewed them for $200 more on in-place rents. And so we look at that and we aren't seeing as much of a delta as we would like in classic unit rentals to renovated unit rentals. And so there's no need, if you're only getting 25, 30, $50 a unit, you don't need to put in 15 grand a unit. You're not getting your ROI there. So it's understanding that piece of it. And in some properties, we are getting the ROI on that. So it's worth it. So it's really understanding your business from that level as well. Just because you're making $20 more per unit, how much are you spending to get that?
To get there.
Right. And then one other thing that we just started doing, because we are more focused now on B-class assets and really great locations, is implementing tech packages, which is the keyless entry, smart thermostat. We're even doing leak sensors in the units. And for that, you can upcharge, what we're finding about $50 a unit. And so that's been a great value add as well. And it's a good value add for the residents as well. You just have to make sure that the property and the median income in that area can support that increase.
Can support it. Yeah, absolutely. A follow-up question to that. How do you test this? Do you just do it with one or two units just to see what kind of rent premium you get with this particular floor plan and that type of thing?
I wish you could. On the packages that we're doing, we're actually leasing them. So I guess if you were buying them yourself, you could definitely test it. But the reason why we're going with a company to do this is because there's a hub that gets installed in the main office, and that hub is connected to everything. So we can actually do showings where our person doesn't even need to be there, right? Maybe it's after office hours, so we can set a code that's good between 6 and 7 o'clock at night, and someone can go tour that unit. So it makes availability for touring a lot better. It also has a sensor for any leaks in the apartment and things like that. So we have to do it all in one shot. So we had to do a lot of research on the property, do the due diligence. Number one, what is the median income? Are the other comps in the area also doing things like this? And if they're not, you don't want to be the first one that's going to create the market. And so you do have to pick and choose. We don't do those tech packages at every property because sometimes the area doesn't support it.
Got it. How do you stay involved with the latest technology offerings? Is that something that you're leveraging your team for? Like, for instance, one thing I'm thinking of is like ultrasonic flow meters for water, right? For water metering. Or, like automatic sensors with cameras and just lots of really cool stuff there. How do you guys stay on top of all that? Is that best practices or, looking at other apartment buildings? How does that work?
So for me, I'm a podcast junkie. I listen to podcasts a lot. And so a lot of those podcasts have those types of things, new technologies, new trends, new things like that. But we also attend conferences every year. So each one of our partners and the team go to a handful of conferences every year with the intent of moving our business forward. And as long as you always have that mindset of moving your business forward and always making it better, it's like that thing where you don't notice a car until you buy one. And then now you see that car everywhere. Well, if you're focused on growing your business, you're going to see those new technologies out there, and it's going to be more front of mind. And so that's what we try and do, is just always educate ourselves and always keep in front of mind that we want to grow our business.
Excellent. Last question I have for you in the asset management side. I know I said that a couple of questions ago, but curiosity just keeps getting the better of me here. Um, is, your guys' name is now Vertical Street Ventures. At what point do you think it makes sense to start bringing the property management in-house? Have you talked about that at all? Or when, because then you get even more granularity, right? Down to the property management level. So I wanted to ask you, where do you feel like this is going to be appropriate for you guys, or if it is at all?
Yeah, great question. It's been a topic of discussion because we're now across that 1,000-unit mark. And so in the golf business, in my previous career, we were property management, but for golf courses. Okay. So cities and municipalities hired our company to manage their properties. And so I understand what that's like. It's very low margin. It's very much a people business, even more so than apartments. And you're dealing with lower paid people sometimes. You're dealing with a lot of customers who are your residents. So it's a thankless business. And so it beats you up a little bit. And so I'm not ready to pull that trigger. However, it's been discussed more for control over the systems that you want to put into place. Yeah. But like I said earlier, we have property management companies that are very open and willing to adapt as we adapt. And so as long as we feel comfortable, there's a strong property manager on our team, then I think we'll continue to have third party. Where we are bringing something in-house is construction management, and they can kind of tie together, but with supply constraints, labor challenges, labor shortages, and time to turn units, that is where I feel right now we and the industry is most inefficient. So if you can solve that problem and you can turn your units faster, stabilize your property faster, you reduce a lot of risk. And so we're going through the process right now of hiring a director of construction management. We're going to have a construction management arm, and we'll have that brought in-house to be more efficient and cost effective in our renovations.
Yeah, that makes perfect sense, because a lot of the money that you spend that affects your business plan is spent in the CapEx or in unit turns. And I think that's a smart idea to prioritize that part of the business first. And when you do that, when you bring on your construction management person, are they working directly with the property manager to oversee their operations? Or are you basically telling the PMs, hey, look, we've got this now. This is our thing to do, and we'll let you know when the unit's ready to be rented?
Yeah, so we're going through this process now. And I think for the first 90 to 120 days, we're probably going to work in tandem with them. But eventually it's going to be, hey, we're built out. We understand what we want now. We're going to be taking over this process. And that really helps the property management companies right now. One big problem that a lot of companies are having, if not all, is they're growing, right? I mean, the economy's been booming. We've got inflation. There's all these things. And so everyone's booming, but can they handle the increases in demand? And I'm finding that a lot cannot, right? Which is a lot of our challenges. And so you're taking this load off of your property management company where they don't have to manage the CapEx. That's huge. Now all they have to focus on is managing the day-to-day of the property. You focus on executing your business plan, and things happen a lot more efficiently. So that's what our goal is. But I think, like I mentioned earlier, we'll probably work in tandem with them for their first 90 to 120 days.
Awesome. Sounds great. I'm looking forward to seeing how that works for you, because that's genius. Last quick question before we head into the rapid round is, can you tell me a little bit about the best and maybe the worst deal that you guys have ever done?
Okay, let's see. Best deal was the first deal I ever did. It was 42 units in Tucson, Arizona, and we sold it. So I can say this: there was not a single thing that went wrong on that property.
Wow. On your first one? Oh my gosh.
And maybe that's the worst deal, because it taught me that nothing goes wrong in a property, and boy, was I wrong, right? So that was the problem with that one. Everything went well. There was no time where we weren't hitting our market rents or even raising well above market rents. We were able to grow the NOI in a short period of time. We were always full. It was just perfect. It was amazing. And, and then we got our second property, and then COVID hit. And so there were a lot of things that we learned there. And one of the reasons why we wrote the book on asset management, because we had to really dive in and focus on those things, because those are what's most important. You can buy right, but if you're not managing it right, the property can still go backwards, right? And so you really have to manage the property right. So I don't have any properties that have been complete duds, but definitely the property that we bought, we actually sold it for a great multiple as well. So we were successful in that, but challenging to have a business plan of turning over the resident base when you can't evict the tenants. because of COVID. So
Right.
our business plan was a little prolonged there. And we weren't able to execute on a lot of things because our hands were tied. So I wouldn't call that the worst property, but it was a challenging property because of the circumstances.
Yeah, I think that your investors probably can give you a little bit of grace when it comes to COVID. That's something that no one really would have predicted. So I think that that should be fine. But yeah, no, that's great advice too. It's almost like you want to kind of cut your teeth on some of these smaller properties, right? That's what I'm kind of reading between the lines here, is that you want to make those mistakes when you only have, 30, 40, 50 units under management. And maybe it's just a joint venture with you and some other people. And you're not having that extra layer of fiduciary responsibility with all these other people that have brought their money in depending on you for returns. So maybe that's one thing to think about. At least that's how I heard it.
Yeah, we did a syndication, but it was mainly family and friends. And we had a strong team, but we didn't start in 100, 200 units. Another great way is to join a team who's already doing 100, 200 units, and you're one portion of that team, but the rest of the team is more experienced and has been there before. And that's a way to learn as well. But you certainly don't want to go into your first syndication with zero experience on how things are going and what to do. And so, I had a team of other people who had already done it, which is, one of the reasons why we were able to be successful.
Yeah, excellent. Sounds great. Okay, cool. Well, Kyle, thank you so much for all of your wisdom on the asset management side. I certainly learned a lot, and you better bet I'm going to go back and listen to everything you just said again as well. There's a lot of detail there. So thank you for that. So if you're ready, let's head into our rapid round, which is the same 5 questions that we ask every one of our guests, and they're meant to be answered in about a 30-second or less response. Okay. Are you ready for it? All right, cool. Number 1, what book has had the biggest impact on you and why, outside of the purple books or the Bible?
Yeah, Who Not How, something I read in the last 12 months. I joined Strategic Coach right after I read it, and it really changes your mindset about how to grow your business.
Excellent. I have to mention here too, Kyle, that this is the 4th time I've heard that today with that same question. So I might have to add that book also to my little exclusion list too.
After you read that, read The Gap and the Gain, which is the second portion of that one, and it's great.
Already there. Yeah, that one is incredible. Very good book. But yeah, listeners out there, you got to be listening to both those books. Incredible. Number 2, if people wanted to emulate your success, what is the first actionable thing that they could do to follow in your footsteps?
Educate yourself. When you're raising money from other people, you have to be educated. And then if you want the second step, just become a person of value, of real value.
Again, could not agree more. Number 3, what is one tool, process, or hack in the last 3 months that has helped you save time and or effort?
Adding people to the team. Our team has grown from, 2 people to 11 in the last 90 days, and it's become a well-oiled machine, and it's a lot easier to get things done when you have a great team around you.
Excellent. And I'm sure your free time is a little bit more ample now as well.
We have big goals, and so we're still working a lot, but it's okay. We've got a lot of big plans over the next 3 years, and I'm excited for it.
That's great. I'm excited for you guys as well. Number 4, if the people you know had to describe you with one word, what do you think that word would be?
Consistent.
Yeah, cool. I could see that. Awesome. And the last question that I have is, what small thing do most people not know about you?
I used to play golf professionally, not at a high level, but in the mini tours around Southern California. And that's where my wife and I met, as we both play golf.
That is awesome. Very cool. How does that work? I know that there's like the TV type tier, and then there's, I'm sure, like another layer or 2 underneath that. I don't want to say
I was
like
all the way at
leagues.
the bottom level. It's
okay.
My wife played at a much higher level, but yeah, it's just going to tournaments and entering in, and there's a pot and you play for that pot, but it's a lot more difficult than you would think, and it was tough. I enjoyed it. I learned a lot, but it was not for me.
Yeah, golf takes a lot of patience. So it's and it shows with your strokes, like where your ball's headed, if it's left or right. That tells you something about your body. I don't know. All I know is the 3 things that my grandpa taught me about golf, and that has done well for me when I play top golf with people, and that's about it. So,
yeah, top golf is great.
It's fun. It's very fun. All right. Well, Kyle, thank you so much for coming on the show. Really appreciate all of your wisdom, advice, and everything. And before we end the show, why don't you tell our listeners a little bit more about how they can learn more about you, what you have going on, your offerings, all that good stuff.
Yeah, absolutely. I would just head to our website, verticalstreetventures.com. That's where you can find out a lot about our team, what we're doing in our portfolio, and also our academy that we just recently launched. And we're helping other people get their first deals in the Arizona markets, which is a tough market to break into right now. And so we're really passionate about helping other people get started in multifamily.
Excellent. Please do take his advice, listeners. Please go ahead and find him online. Also, why don't you mention your book as well?
Oh yeah, absolutely. Sorry, I didn't mention that. I
Yeah.
appreciate that. It's called Best in Class, and it really is one of those books that you can just flip to depending on where you're at in your business plan or process, whether it's due diligence, it's disposition, marketing, leasing help, all those types of things. You can flip to that and get some tips in there. So pick that up, and that's available on Amazon.
Absolutely. I recommend listeners do that. I just got my copy today right at the door. So looking forward to leafing through that, Kyle. Thank you so much for coming on the show. And for those listeners who have listened all the way to the end, I want to thank you guys too. And wherever you're listening or watching this, please like, subscribe, comment, engage with us, because we want to hear more from you. We want to make sure that we're providing excellent content for you so that you can grow either passively, actively, or wherever you are in your journey. And we want to make sure we're doing that well and continue to have excellent guests like Kyle on the show. So that being said, Kyle, thanks again for being on the show. Really appreciate you.
Thanks, Derek. I appreciate it.
Absolutely. And thank you very much, guys. And this is Derek. I'm signing off for the day. Take care, everyone.